Good day Forex trader. Eur USD Forex signal, more gains possible. The pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.1440. Bullish view. Buy the Eur USD pair and set a take profit at 1.1440. Add a stop loss at 1.1300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1350 and a take profit at 1.1300. Add a stop loss at 1.1400. The Eur USD pair drifted upwards on the first trading day of the year. The pair is trading at 1.1373, which is about 1.7% above the lowest level in 2021. Volume to start rising. The Eur USD pair rose slightly last week amid a low-volume environment. Most traders and investors were away last week to celebrate the Christmas holiday and New Year. At the same time, there were no major economic data from Europe and the United States. The most important numbers were the U.S. pending home sales and the home price index. The situation will start to reverse this week as more investment companies are set to reopen. Also, there will be key economic numbers that will move the Eur USD pair. On Monday, market will publish the latest manufacturing PMI numbers from the US and the European Union. Economists expect the data to show that the Eurozone manufacturing PMI rose to 58.0 in December even as the Omicron variant continued spreading. In Germany and France, the PMI is expected to have risen to 57.9 and 54.9, respectively. Meanwhile, in the US, data by market is expected to show that the PMI declined to 57.8 while another one from the Institute of Supply Management, ISM, is expected to show that the manufacturing PMI declined slightly to 60.1. The Eur USD pair will also react to the rising number of COVID-19 cases in Europe and the United States. In the US, the 7-day average in the past 7 days has been more than 340,000. Similarly, the number of cases has been positive in the past 7 days. Therefore, there is a likelihood that the number of cases will keep rising because of the Christmas season interactions. Still, the only positive is that the variant is relatively mild. Eur USD forecast. The Eur USD pair has been in a tight range in the past few weeks. On Thursday and Friday, the pair managed to tilt upwards and cross the key resistance at 1.1357. It also moved above the 25-day and 50-day moving averages, MA, while the Relative Strength Index, RSI, has tilted upwards. The MACD has also been rising. It is also along the 38.2% Fibonacci retracement level. Therefore, the pair will likely keep rising as bulls target the 50% Fibonacci retracement level at 1.1440. This view will be invalidated if it drops below 1.1350. Aud USD Forex signal, Aussie retreats ahead of RBA decision. The pair will likely resume the bullish trend as bulls target the key resistance at 0.7350, which is slightly below the 61.8% retracement level. Bullish view. Buy the Aud USD and set a take profit at 0.7350. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Sell the Aud USD and set a take profit at 0.7180. Add a stop loss at 0.7300. The Aud USD pair tilted lower on Monday as concerns about the COVID-19 pandemic in Australia rose. The pair is trading at 0.7250, which is a few points below last week's high of 0.7277. Australia COVID concerns. There are heightened concerns about the COVID-19 pandemic in Australia. Recent data showed that the number of cases in all provinces has jumped. Earlier on Monday, the government confirmed more than 35,000 new cases. That was the biggest daily increase since the pandemic started. In New South Wales, the number of cases jumped by more than 20,000 while in Victoria, the number rose to more than 8,500. Queensland reported more than 8,500 cases while South Australia recorded about 2,552 cases. According to the Victorian health official, the number of cases recorded this year was higher than those recorded in 2021. Still, while the number of cases has risen, the number of deaths remains substantially low. The country recorded just 14 COVID-19 deaths on Sunday. The Australian government also unveiled new measures to curb the spread of the disease. These measures include mask mandates and encouraged more vaccinations. At the same time, the government said that it will not provide PCR tests for free. In a statement, the country's Prime Minister said the government had provided billions of dollars to support Australians during the pandemic. The next key catalyst for the AUD-USD pair will be the latest interest rate decision by the Reserve Bank of Australia, RBA. Analysts expect that the bank will continue with its quantitative easing, QE, as it continues with its support for the economy. In its most recent decision, the bank said that it will end QE. Also, the bank is expected to leave interest rates unchanged. AUD-USD forecast. The AUD-USD pair declined to a low of 0.7250, which is slightly below the ascending trend line. The pair has moved slightly below the 50% Fibonacci retracement level. It has also moved slightly above the 25-day and 50-day moving averages while the MACD has continued to decline. It has also tested the lower side of the small ascending channel. Therefore, the pair will likely resume the bullish trend as bulls target the key resistance at 0.7350, which is slightly below the 61.8% retracement level. This view will be invalidated if it moves below the key support at 0.7230. Gbp Usd recovers a major part of its intraday losses, holds steady above 1.3500 mark. A strong pickup in the USD demand prompted some selling around Gbp Usd on Monday. The risk-on mood capped the safe haven USD and helped limit the downside for the pair. Investors now look forward to this week's US macro data for a fresh directional impetus. The Gbp/USD pair remained on the defensive through the first half of the European session, albeit has managed to recover a few pips from the daily swing low. The pair was last seen trading around the 1.3515 to 20 region, down less than 0.1% for the day. The US dollar made a solid comeback on the first trading day of the new year and failed to assist the Gbp USD pair to capitalize on its recent gains recorded over the past 2 weeks or so. The Fed's hawkish outlook, indicating at least 3 rate hikes in 2022, along with elevated U.S. Treasury bond yields acted as a tailwind for the greenback. It is worth recalling that the yield on the benchmark 10-year U.S. government bond recorded the largest yearly increase since 2013 and ended 2021 above the 1.5% threshold. This, along with the worsening COVID-19 situation in the United Kingdom, further undermined the British pound and exerted some downward pressure around the Gbp USD pair. Britain has been reporting a record number of new COVID-19 cases over the past few days, which could force the government to impose more restrictions. It is worth recalling that the UK Prime Minister Boris Johnson had said last week that ministers would keep the latest data under constant review to see if additional stricter measures are needed. That said, the underlying bullish tone, as depicted by a generally positive tone around the equity markets, capped gains for the safe haven greenback. This, in turn, assisted the Gbp USD pair to reverse an intraday slide to sub 1.3500 levels. The attempted recovery, however, lacked bullish conviction amid quiet holiday trading. Nevertheless, the emergence of some dip buying at lower levels supports prospects for an extension of the recent upward trajectory. Bulls, however, are likely to wait for a sustained strength beyond the 100-day SMA before placing aggressive bets ahead of this week's important U.S. macro data, including the closely watched NFP report.